Hello everyone. Today we talk about credit. Credit is a very big deal. It touches almost every part of your financial life. Many people are scared of credit or they simply ignore it. This is a huge mistake. You must understand credit. You must learn to manage it wisely. Your financial future depends on this. Think of credit as a special key. This key can unlock many important doors for you. Want to buy a beautiful home? You need good credit. Want to get a loan for your child's college? Good credit helps. Even for smaller things like a new smartphone on EMI. Without good credit, these doors can stay firmly locked. Life becomes much harder, much more expensive. Credit is also like your financial reputation. It tells banks and lenders if you are trustworthy with money. Are you someone who pays back what they borrow? Your credit history answers these questions. So, let us start this important journey together. So, what exactly is this thing called credit? It is quite simple, really. Credit means you are borrowing money. You get something now like goods or services, and you promise to pay for it later. Usually you also pay an extra amount called interest. This is how banks and lenders make money. There are mainly two types of credit you should know. The first one is called revolving credit. A credit card is the most common example here. You get a credit limit, say 50,000 rupees. You can borrow up to this limit. You pay it back, maybe some or all of it, then you can borrow again up to the limit. The second main type is installment credit. This is usually for bigger purchases like a car or home loan. You borrow a fixed sum of money one time, then you pay it back in regular fixed payments called EMIs. Using them correctly shows you are financially savvy. Now let us talk about your credit score. You may have heard about it, it is very important. A credit score is a 3-digit number. This number tells lenders how reliable you are with credit. A higher score means you are a lower risk. This is good. A lower score means you are a higher risk. This is bad. Lenders use this score to decide things, like whether to give you a loan or a credit card, and what interest rate to charge you. This score is calculated from your credit report. Your credit report is a detailed record of your credit history. It lists all your loans and credit cards. It shows if you have paid your EMIs and bills on time. It shows how much credit you are using. It shows if you have ever defaulted on a loan. In India, credit scores usually range from 300 to 900. CIBIL is a very common credit bureau here. A score of 750 or above is generally considered excellent. With such a score, you will likely get loans approved easily. You will also get lower interest rates. This saves you money. Section 4, the power of good credit unlocking doors. Having a good credit score is like having a superpower. It truly is that powerful. It can change your life. It opens so many doors that might otherwise be closed. Want to buy your dream home? Good credit is essential. It helps you get a home loan approved faster, and not just any loan, a loan with a lower interest rate. This can save you lakhs of rupees over the years. Need a loan for your child's higher education? Or perhaps you need a new car for your family? Good credit makes these things much easier to achieve. Lenders will trust you more when you have a good score. They will be more willing to offer you better terms. You will have more options to choose from. You will not be desperate, forced to accept bad deals. You will have more negotiating power, even for things you might not immediately think of. Some landlords now check credit history before renting out their property. They want to see if you are a responsible tenant. Some employers might also look at your credit report. A good credit history shows you are reliable and manage affairs well. This can be a significant advantage in many areas of life. Section 5, building a strong credit foundation, smart steps to take. So, you ask, how do I build good credit? Or how do I fix my credit if it is not so good? I will tell you, it takes time and it takes consistent effort, but it is absolutely, definitely doable for everyone. The very first rule is the golden rule. Pay your bills on time. Every single bill, every single time. No excuses. Your loan EMIs, your credit card bills, utility bills if reported. Late payments are like big red flags to lenders. They hurt your score very badly. Make this your top priority. The second important step is about how much credit you use. Do not use too much of your available credit limit. This is called your credit utilization ratio. For example, if your credit card has a limit of 1 lakh rupees, try to keep your outstanding balance below 30,000 rupees. So, use less than 30% of your limit. Using too much credit makes lenders nervous. It suggests you might be struggling with your finances. Keep your balances low. It is also good to have a healthy mix of credit types. This is known as your credit mix. For instance, having a credit card, which is revolving credit, and maybe an installment loan like a personal loan or consumer durable loan. Lenders like to see that you can manage different kinds of credit responsibly. Finally, you must check your credit report regularly. Look for any mistakes or errors. Section 6. Common credit pitfalls. Traps to avoid on your journey. Many people fall into common credit traps. These mistakes can be very costly. They can ruin your score. One of the biggest mistakes is paying only the minimum amount due on your credit cards. The minimum payment is a trap. Please understand this. If you only pay the minimum, you will pay a huge amount of interest. It could take you many years to clear that debt. It is like quicksand for your money. Always try to pay the full balance on your card each month. If not full, then pay as much as you possibly can. Another major pitfall is maxing out your credit cards. This means using up the entire credit limit on your cards. This is a huge red flag for lenders. It shouts to them that you are in financial distress. It tells them you are heavily reliant on borrowed money. This will damage your credit score significantly. Remember what I said about credit utilization? Keep it low, preferably below 30% of your total limit. Co-signing a loan for someone else can also be very risky. When you co-sign, you are legally responsible for that debt. If the primary borrower, your friend or relative, does not pay, then you will have to pay it. It is your responsibility. And their missed payments will damage your credit score too. Think very carefully before you co-sign any loan. Section 7. Take charge of your credit. Your future awaits. Understanding and managing your credit is not rocket science. It is not some complex mystery that only experts can solve. It is primarily about discipline. It is about good habits. It is about making smart, informed choices every day. It is about being responsible with the money you borrow. You have the power within you to build a strong credit history. You absolutely have the power to control your financial future. You must believe this. This is the undeniable truth. Take that control. Good credit is one of your most valuable financial assets. It is like having a financial superpower, truly. It can help you achieve your most important life goals. Buying a home for your family, providing good education for your children, having a reliable car, ensuring a secure retirement. All these dreams become much more accessible with good credit. It also provides immense peace of mind. It reduces financial stress significantly. So please do not be afraid of credit. Instead, learn to use it wisely and to your advantage. Use it as a tool to build wealth and security, not as a trap that leads you into a spiral of debt. Educate yourself continuously.